With just about a week and a half left in 2024, I think it's important to have a look at what equities might do based on where the technicals fall within bonds, particularly the 10-year Treasury notes, giving you some very clear defined levels here that I think make this a really interesting exercise as we head into 2025. So let's get started here and have a look at this very straightforward chart. So what we're looking at here is the long-term chart, a weekly chart of a 10-year Treasury note yields. And we've been making a really big deal about this over the past number of years. We said that this point in time here, let me quickly highlight it, where yields started breaking above the long-term trend, and I say long-term like 40-year trend, marked an important point in how bond yields are going to be for the coming 5, 10 plus years. In fact, we think we are in a new higher U.S. rates environment, and so that's an important point. It's also why I think if we see yields come down on the short end, I'm not quite sure the long end is going to follow. So that's an important point here to keep in mind. But let's specifically focus on 10-year because it is still a benchmark where lots of algorithms focus on that track the markets and ultimately that also feed into what the stock market might do. So even if yields come down, I don't see us going down much below, in an extreme scenario, maybe 2.5% or so. I don't think we can go back and dip meaningfully into this below this trend line here. Now, more near term, if we look at this through the lens of, again, still this weekly chart, we do have some very clear levels to watch. Essentially, we have sort of this little mini level here, trend line, I should say, and then this one here. And so I think given there's still very, sort of chart chaser environment we have, I'm not quite sure going from 4.4 to 4.7 is going to matter that much. I think the real concern is if we break above, let's call it 5%, is probably where the equity market will be more concerned. So that's kind of the level that I'm watching. 5% is that level that I think is important on the upside. On the downside, I think similar. I'm not quite sure breaking below, sort of the more near term, like back end below 4% is going to matter much. I really think we have to break, probably with some conviction, below 3.6 and then towards that 3.3 level, which is quite frankly a level that we've been highlighting for the most part of this year. We said, listen, 3.5, 3.6, maybe that starts to make the equity market nervous, but it's really when we get below there. So I would watch this range really that we've seen 10-year treasuries trade in since essentially the past, let's call that 2 years and a couple of months. So mark 5% on the upside, mark 3.3 maybe on the downside, 3.5. Again, it's not an exact science for where equities might start to get a bit more nervous in the overall. So that's it for now. Have a great rest of your day, and we'll see you in the next video.